Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Tuesday evening, the 17th of November, 2020, 6:10 p.m. Central Time, which also means the chart action behind me is already for Wednesday. The markets open at 5 p.m. Central Time, and I like them to reopen in as many as possible when I create these. So the dollar index down 23 points. Didn't help gold that much today. Silver was the market that did great. It got up to a key resistance point where I told my clientele this morning to take a certain action. You got to be a subscriber to know what I'm doing. In the euro currency, the market flat right now, but still pushing on that 119 area. Most currencies just hanging here. In the British pound, they're still talking. The chances of getting, in fact, this weekend, the Brexit deal done are very good. They keep fighting over fishing rights. Come on, if you're going to be able to fish in UK waters, it should be reciprocal. And forget these 500-year-old treaties. I mean, as an American looking at this, we go, this is craziness. Energy markets, we get the EIA number in the morning. Housing starts in the morning as well, so you're going to want to see what those numbers do. Now, in a weekly chart of just closes, gold remains under pressure. Whenever you're under this 18-week moving average of closes, when you're under it, it means the bias is down. Over it, the bias is up. Neutral is getting right back to the number, and that would take 1922.60. So the bias is down. When I go to a daily bar chart, you can see how the market is just stuck within this big trading range day that happened. I think that was, what, the 9th or so? And the market's just hanging right in there. Now, the pattern of the market is interesting. We have a pattern of higher lows and a higher high because this outside day up took that out. So I'm going to call the trend of the market in that sense friendly, bullish. The market is unfortunately under the 18-day average of closes, and as you could see again today, that was your battleground, and the market's just not able so far to get over it. A close over 1891.5 would put the bias up with the higher low, higher high pattern. The number you don't want to see taken out is that outside day up's low of 1861.5. If that number were taken out, I'd be looking quickly to see if the market can get to wherever the lower Bollinger Band is. Tonight it's around 1840.90. So battleground right here, no real trend going on, in a market where the momentum of the slow stochastic, which often leads prices, momentum leads price, not price leads momentum, just drifting. It's giving us no clue at all. When I look at the gold-silver ratio, as long as you stay under this red line, which is the 18-day moving average of closes, the bias is down. Bias down means you need less ounces of silver to get an ounce of gold. The parlance means silver stronger than gold. Now, in looking at the silver market, look where you're fighting your battle right now. The pattern of the trade is higher lows, but suddenly lower highs. So you've gone into a pause against the 18-day average of closes in the 100-day, right into that area. And momentum has turned slightly down. So, interesting time in the market. Are you going to take out this low here, or are you just going to hang around that 18-day average? My guess is you're just going to hang around the 18-day average. We'll see if I'm right or wrong on that. In the copper market, whenever you hit a Bollinger Band, this black dashed line, the first time you hit it, I teach in my charting course that is where you take money off the table. Now, admittedly, I am assuming that when the bias is up, you have a long position. When the bias is down, you have a short position. There's no other way for me to assume different. So when you get up there, that's what my assumption is. And another way to look at it is that's your first resistance point. So the market hit that, it's backing off. It's also in an overbought condition with 70 readings. Any reading in the slow stochastic study, either one of the numbers, the K or the D line, that's over 70 is overbought. Until the markets get under them, if one number gets back under 70, it's still overbought. Both got to get back under it. So I have an uptrend that is overbought, not trying to drive much further so far. In the platinum market, Market had gotten up the other day right here to that upper Bollinger Band, and it has succeeded in going a bit higher, but it's trying to pull back. You don't spend much time typically over that. The algorithm is built so that 5% of the time the market stays over it. I count each successive close over it. Each one is taking away one of those 5 percentage points. I found that to be a handy rule of thumb. And then I have other rules. Let's assume it just stays on that band 3 days in a row. Even though I'm still looking for it to pull back, it's a sign of great strength. Not the sign necessarily on the copper as it backed right off from that. That's all I'm saying. It's all degrees of how strong the market is, and you're overbought as can be in this market. In the palladium market, you have been stuck at this 18-day average of closes. The market has lower high, lower low. The trend is down. The bias is down since you're under the 18-day average, and momentum down. All systems are go. What would negate this? Well, let's talk a couple of things. If we come to this day, we had an outside day up. Do you see that right there? Then the market comes down. Has it taken that day out? No. To get real confirmation from me, I would love to see 2305.30 taken out tomorrow. Then at least I'd have a goal of 2256. Not doing that and getting back over the number here, this could be a trap for everybody. So that's how I'm reading the chart at least. And in the dollar index, I have been very bearish, but you are now in oversold territory. Last time we got oversold, this time you're getting bounces from those areas. So I'd be very cautious here. The dollar at any time can give you a bounce. It doesn't mean it's a trend change. It's a bounce in an oversold market. Should the market decide to just plow down, well, then I'd be looking at 91.96. But I think you're at a zone where the market might try to hang on here for just a little bit. That's my instinct on the market as I look at the charts. During the daytime, one of the tools that I use when I'm looking at positions, and I am not a day trader, I want to make this ultra clear. I am a trader that thinks of myself as a swing trader. Swing trades can last weeks, they can last days. Futures markets with 90% leverage lend themselves to this type of trading more than they do other types. That's what I've learned in my 50 years. You don't have to agree with me. It's what I believe, and that's what I am here talking about. So I use this formula, and I learned this formula again from one of the traders that developed this. And the idea is the market on its own, and that's how they had taught it. When you come down to the first support level, that's a buy looking to get back up to this number. If you get down to the second support, you're looking to get back to the first. So it's a way of doubling up, and if the market goes back and forth. I put my own twist, as I usually do, on different indicators, and I said, well, what if you tie that together with momentum in the market? So what I adjusted to is my slow stochastic study. Now, typically, these pivot point charts are 15-minute charts. I've seen people try to use 5, 1 minute, and so on. I've done it myself. I'm comfortable with a 15-minute chart in here. Some people go to 10, and I've seen that work. Much shorter, I'm not convinced it's right. If you're an algo trader, maybe you can put in the orders fast enough to react. I found I can't. A human being is not as fast as the computer. It can't digest it all, everything that you think. It's going to be the algo trade. But the way that I slow it down by using the bigger charts, I think we have the edge on the computer. It's that simple. I look at my overbought, oversold conditions, tie it into where the market is, and I use it in looking at what I teach in my charting course with my different swing lines to say, gee, I'm trying to be short the market. It rallied up in this example. It's getting overbought. Maybe my number's too high. Maybe I should lower that. This is the process that I go through. If you'd like to learn how to use this, I created a 3-part series for you, all videos that explain this in total detail. Just call us at 866-973-2077 or go to our website, www.iraepstein.com. On the bottom right, you'll see free offers to Pivot Point series. I'm Ira. You have a good day. I hit the wrong button there. Sorry about that. Oh, one last thing before we go. I was going to hold a webinar this Thursday. I've moved it to Monday. I am just so swamped right now with the trade that is going on for my subscribers that I don't have the time, and I want to do another special report this week. So I'm going to use the next 2 days to do the special report. I'm going to do the webinar Monday, and I'll send out the emails on that. You have a great day.